Good evening, friends. Welcome to my channel, Stock Index Edge. So in my previous videos, I was talking about the quarters theory. Quarters theory, that is time cycles. 6-hour time cycle has been divided into 90 minutes cycle. First 90 minute cycle ends up at 10:30 and second time cycle ends up at 12 and third one ends up to 1:30 and so on. So 90 minute cycle. So I was talking about the market phases: accumulation, manipulation, expansion and reversal. See, our market starts with the reversal phase, ends up at the reversal around 3:30 and this is the continuation of the reversal. So only experienced trader who can read the price action properly. See, not only your indicator will help you, but also simultaneously you should know the price action very well. Then only you can take the trade properly. I thought one more hack by adding one indicator, well, two indicators. One is 200 period exponential moving average. This yellow line is the 200 period exponential moving average. Have added to know the trend. That means if there is any correction in the intraday trade, this will act as a support. As long as the price stays above the 200 period moving average, then you can go long. I'll change the time frame to 15 and 30 minutes. So everywhere this price is above the 200 period moving average. Another indicator, it is called as Alligator. Popularly, it was developed by Williams. That indicator I've added. These three lines, what you are seeing, is a combination of three moving averages and it has been named as an alligator because this green line as compared to the lips of an alligator and this is red one is the teeth and third blue line compared to the jaw of the alligator. So as a trader, intraday trader, you should be in a expansion phase or a reversal phase, right? When alligator sleeps, its mouth is closed, lips are closed, teeth are tight, and even the jaw is tight. So you can find by seeing the indicator. That means if all the three moving averages are converging together, that means alligator is sleep. That time you should not enter into the market. And also when such type of sleeping hours, what is going to happen? Whether it is going to go up or whether the mouth will open towards the downside, we will not know. For example, here on the previous day, 30th, the expiry of the monthly expiry, what happened is, see, you can closely observe the price action. In the morning itself, the reversal continued to downside and where I have discussed about the support. When it came to this level, in quarters theory, already I have mentioned all the levels. And here, price was coming. It was making lower highs, lower lows. And here, it made a little bit change in this area. You can clearly see it made a little bit change. It crossed this low, immediate low, and made an high. So the next thing is it made a higher high and higher low, confirming trend is building. There, if you see the sleeping alligator, the converging moving averages around 1:30, around 3 p.m. Around 3 p.m. before to that itself, it started opening up. You can closely observe. I'll zoom it out. Closely observe that lip started crossing over the jaw and the teeth. So they started aligning themselves in an order. This is actually lip is 3, 8, and 13 period moving averages. So these are the very, very shorter time period moving averages, which are helpful for the intraday trade. So that you are confirmed finally the market closed around this area and also above around 44,477, well above the indicators, indicating positive move on the. You know what happened on yesterday, December 1st. So the momentum picked up, and here after only up to the first session, after the first session around 10:30, there was a moment. Later, these moving averages started converging, and also you can see this is the accumulation, black box is an accumulation phase, that is from 10:30 to 12, the market went sideways. And also you could have recognized, if you are carefully, if you would have observed the price action, you would have made that, you would not have made, actually this was a trap making. But here, if you see the market starting making lower lows, but it came up to this. See, it made a double top over here, double top in this area, and moving averages started converging. So as a trader, intraday trader, you should be away from this trade. Only you can see in this period around 225, the market started falling down. See, you can see it indicated a lower low by forming a wick. That itself is a breakout of the change in market shift has taken place, even though the price closed above there. But this wick indicated market is going to go down. Then you should wait for the, it acts as this price acts as a resistance, wait for the rejection of that level, and also simultaneously this quarterly cycle indicator, it will plot the daily true range. This is the daily true range and the low of the session. So when the price is closing below that, you should never go long. You have to go. Finally, it ended up the no. So like this, with the 3 indicators, additional indicators, I have plotted alligator, Williams alligator, and then 200 period moving average to know the trend. So the trend is very, very intact, even though it is a correction in a smaller time frame, it is in a longer time frame, it is bullish. So any correction to this level or above this level, you can take it as a buy on dips. And this is the resistance, immediate resistance. And this level, 44,701 is the level, 44,695 is this session opening, micro session opening level. So this may act as a support. For example, on Monday, if it takes support, you should go long. You should go long like that. So you can make, so you know the support levels where the market can hit, and later if it starts this alligator or the price action. Suppose after hitting this level, let me remove this. When the price comes to this level, around this level, let me take this. Here, if it starts making like this W pattern, and then these moving averages may converge and they may point towards the upside. Then you can go long. Until then, you should not take your trade. But this is once if the price goes below this, the market shift will be there, change in the direction of the trend will be there. So you need to wait. And in this way, by plotting these quarterly cycles, by knowing what is happening on the time cycle, time period, and also with the help of a very, very small time frame moving averages, that is the combination of the moving average 3, 8, and 30. It is combined with the Williams Alligator. So you can use these indicators as a guideline for your trade. If you are unable to read the price action at the micro level, see, only if you are experienced, I can read the market structure shift by seeing this wick itself, even here itself, but it did not confirm. It went up to this level. It got rejected. See, 100% retracement over here, pullback. We do not know. Sometimes they will start moving above that level. But this wick, this candle wick suggested break of the structure and market shift. This you have to read. You should know how to read. And later you can see the alligator's direction. Lip came down, teeth in the middle, and jaw in the upper side. If the trend is going down, jaw comes at the top. But if the trend is going up, jaw should be at the bottom. The alignment should be like this. So and if they are wide open, you will make lot of money. In this morning session itself, morning momentum, you could have. So as an intraday trader, you can utilize this time cycle as well as with the help of the indicator as a guideline. You can take your trade if you are unable to read the micro price action structures. That's what I have tried to simplify your trade with the help of these indicators, and I have explained you how to use these indicators, and I hope you can take the trade. Thank you very much.